It's Monday. Let's review Euro. What happened today? I always stress on the forex currency. Trading should be simple, sometimes complicated, but most of the time should be very easy, simple. I always emphasize my strategy. 5 day, simple moving averages, 10 day moving averages, 5 days always visit almost every day. I would say 80% of the time 5 day moving average will be visited, and look for a pattern for the forex. When you see a pattern, that means it will have a trend, new trend coming, have a reversal trend, either create a new pattern or have a different kind of pattern, different kind of trend. For example, like this one, right? For the 60-minute on the right hand side, we see a rising channel here. It's oftentimes we see something like this, right? When we see it, look for a breakout, either break down or break up, always. Like this one. This is a falling wedge, like I would say it's tapering. It's close to tapering, right? Look for a breakout, either has a new trend, new low, different kind, pattern channel, or break up. Now this time we choose to, break up. So for today, so on Sunday, it closed way below 5 day moving average. So time to, based on the two scenario, the 5 day moving average should be visited. Let's see if we have a rejection. Today it didn't get rejection. When it hit 5 day moving average, it went all the way to 10 days moving average. So that's, and also when it opened, it was so far away from the 5 day moving average. So even fall, when the fall doesn't fall, you should notice the pattern. You should know what's happened. And also look at this big trend line here. All right, there's a huge, this trend line is a support. It's definitely a support. You can identify the pattern here and look at the 60-minute. It's very simple pattern to identify. Don't be scared to identify pattern. Okay, here, right? We got a wedge. We got a triangle wedge here. Now right to the tapering point. The market has to decide which way, wants to break. Either it could break down, right, or break up. Since for this market, for the overnight, it decided to break up. Very much, you can use smaller time frame to enter your positions. And then for the final, look at my another favorite strategy over you. Look at the 5-minute chart, right? 5-minute, the 50 cross 200 moving average. I always stress the important this moving averages on 5 minutes. So definitely look at it. Even here, I can identify pattern. All right. Tapering. This is a wedge. It's just coiled so many hours. Finally, have a decide to break up. When you break up, this is quite significant. I think for experienced traders should be able to pick up at least 20 to 30 pips, in my opinion. Okay, should be able to pick up 20 to 30 pips. This one's a little bit tricky because we got resistance here, right? 10-day moving average. Look at daily chart here. Look at daily chart. We hit resistance, daily chart, 10-day moving average. So for today's trading, I would say it's quite simple. The patterns are pretty obvious. Once the market moves, it will move, more than 1 hour. It won't move, 30 minutes and start moving up. Usually, the market will give us a few hours. I would say 3 to 4 hours time frame to move, a new trend direction. So you can time your exit. The market, won't, if the market, turn around, that's different. It's a reversal. Usually when it goes to one direction, the market will stay there for at least 3 to 4 hours at least. So you got plenty of time to exit. If you're not greedy, you should be able to pick up points, profits. Okay. So what's going to happen tomorrow? Now we can tell 10-day moving average of resistance, and now it's a trade close above 5-day, almost close above 10-day moving averages. It's interesting. Looks like the market forming a bottom here. Don't know yet, but it looks like forming a bottom, forming maybe a cup here, maybe bounce. Maybe tomorrow we have an inside bar. So let's see. So 5-day should be a support, and then today's low also is a definite support. But look at the 15-minute, 60-minute time frame. I always say, once above 200 moving average on 15-minute, it is slightly bullish. So now we treat the market as slightly bullish. And then also look at 60-minute. 60 minutes seems like it wants to stay above 200 moving average too. So that's another bullish sign. Now I now identify another pattern here. Look at the pattern here. Right? Now we got a triangle wedge again. Now look for a breakout. I don't know which way it goes, but let the market tells us either go break up or break down. So look for the directions. So we got a triangle wedge. Looks like, wait for a breakout. Okay. And look at the weekly chart. See, we have 1, 2, 3, 4, 5 down weekly bar. Of course, we can have continue, down bar, but looks like, this week we might have a green bar. So we will see. Let's see what will give us green bar this week. And let's look at the Bollinger. Now it's trading is, kind of, between the lower band and middle band Bollinger bands. Okay, let's look at dollar index. Okay, the dollar index. I think this trend line should be taken out. Let's make it more simple. And this one is this trend line still support this long trend line. Even it got broken once, but it was a fake breakout. It turned around, now went up here. Now is trading between above 50-day moving average. Seems like the down index still strong, and today just closed below yesterday's. Closed below Friday's low. So let's see. It will go further down. Looks like it wants to go further down. Okay, for the dollar index. So slightly bearish for the dollar index. So again, for the Forex, always look for pattern. Identify pattern, identify trend. Oftentimes, the pattern will last about a few hours before a new pattern, formed. So for this case, like this one I said, So now we have a new triangle wedge. Let's see which way it goes. Okay, for the 15 minutes or above 200 moving average. Now to 60 minutes seems like it wants to stay above 200 moving average. As long as above 200 moving average, euro should be bullish. The uptrend continues. Okay, very simple. So for the resist, for the support, let's say 50% retracement of today's candlestick bar should be good support, and also 5-day moving average. Watch out. And above we got resistance. We have 50-day moving average and 20-day moving average for resistance. I don't think it will hit 50-day. Most likely it will retest last week's high, in my opinion. 1 2 3 4 5. I mean, this right here, I don't think it will hit 50-day moving average. Most likely it will hit the last week high, which is this one, right? 1.076 should be a little bit above. That should be a major resistance. And 50-day, that's another one. Okay, so watch out these two levels. Good luck on your trading. Thank you for watching the video. Goodbye.